All right, welcome to Built by Trading's trade reviews. I took a couple of trades over the last week. The first one was Apple, and then the next one was Arista, ANET. We're going to go over those and basically how I executed it, why I executed, et cetera, et cetera. Firstly, if you look at the cumulative number score, Apple and ANET, they were in the positive. They were bullish over time, so that's basically the cumulative number line score is basically how intraday price action is acting, and then also where it is closing relative to specific daily levels. I'll make future videos on understanding that, but that's the first thing. You have to know the place to be at. All right, number two, Apple had earnings. Okay. My thesis was just like Google and Meta and all the other Mag 7 names that got crushed during earnings, they all got bought up, and they all got bought up heavily. So my thought was Apple would do the same. I don't trade, sometimes I'll trade earnings the day of. It didn't really give, if we go down to the 30-minute here, it didn't really give you a trade on earnings day. So it didn't really give you a trade on earnings day. Which is fine. And so what I do is I wait at least 3 days. So on the third day, it becomes active 3-4 days afterwards. And so I bought here on Wednesday. Why? Because number one, it's not a bearish engulfing candle, but it got rejected pretty heavy on Friday. But then guess what? That Monday move got rejected on Tuesday and it got bought up. So I like that look. There is a nice gap down that was a potential fill here. And so I was basically looking for a potential gap fill. How quickly? I don't know. But I was looking for a gap fill. Yes, it is below the 8. Yes, it is below the 21. But again, my thesis for the prior moves, they didn't care about those. Google didn't care about it. Meta didn't care about it. They didn't care about it. Gap down here, ripped right through them. Meta, gap down here, ripped right. Well, it ripped. This is a little bit lower, but either way, it tagged the 21 here. But it didn't really care about the 5 or the 8. And so that was basically my thesis, right? So looking at the 30-minute time frame here, what happened during the day? Intraday signal, I have my breakout levels here. It's not going to show because it's too late to show this past 5 days, but that's fine. If we look at the daily chart, here's the opening range, 930 bar. We got a nice push out higher, so we got an A-up on this ACD process. Comes back down. It tagged the anchor VWAP, and I enter on anchor VWAP crosses or tags for intraday stuff as well. If the A-up level fails. And so I entered there. And I'll show you my levels, my risk and whatnot. So I risked the low of the day. My entry was $300, $309. My stop loss was $305.66. So it was just below the low of the day. Basically a 1.08% stop loss. So that means I only really need a 1% move to make a 1-to-1 ratio. I need a 2% move to make 2-to-1. I risk X amount. I'm over 1% down, and I'll make that amount on the 1% up. Except over the compounds, because each day the percentage changes because it's based on the close, right? And so that's what I did, and I just held it. I typically have the 3-day pivot here, the rolling 3-day pivot, which is this blue box here. It was underneath, it was holding it nicely. I was just letting it work. Eventually, I continue to hold it, and then I was up. I was up like 1, and I hit 2R here. I failed to move my stop loss up. Oh wait, no, I lied. On Friday, I posted about it. So I shouldn't do these things super late. On Friday, I posted about it. I was gonna either close out or wait to see what the close on Friday, or wait to see the price action at the end of the day for Friday. I liked the little push that it had on Friday. And so I held over the weekend, and then on Monday it gapped down. So I had a nice trade that I could have closed out or about 1.25 R gain, and then I ended up losing about 0.75 R. So that is a little irritating, and why I don't typically hold over the weekend, because I get hit on gaps frequently over the weekends. So Yeah, this one was a loss. It went from a green to a red trade. These things happen. I do the best I can to mitigate these risks. I just didn't close out my trade because I like I hit I'll just let the trade work. All right, so that was a loss on my end. Next one, ANET. I took this trade. Let me close this out and then put this risk calculator on. All right, so thesis here. Let me clean up the screen here. Sorry, hide that. We look at the daily. This is the place to be, right? This is it's a volatile name. It moves nicely. This was basically a breakout. So on earnings, it broke out and it did nothing but sell off. Where did it pull back to? It pulled back to the breakout level. It pulled back to the 5 EMA. It pulled back to the anchor VWAP from this low. It pulled back to the 8 EMA. It tagged it and it held, right? So I entered here on Monday. There's a little circle here. I'll show you here in a second. But basically, is this look, it's breaking out the all-time highs. It's a volatile name. You like volatility as a trader, right? I do. You should. I'd recommend. So basically, I was looking here. I have all those confluence areas, 5, 8. You can do that from the low, and pulled back X how much? So from the high to the low here, pulled back 13% in 5 days. And so I was looking for a bounce basically. I entered here. Price was crossing the anchored VWAP or for the VWAP of the day, and it got rejected. So it chopped around, didn't really do anything. I just left I'll show you my entry here. My entry was right here at $192. I also posted this on X. I put my stop loss at the low of the day at 2.6% stop loss size. So it only takes 2.6% of a move to make 1-to-1. I like my stop losses tight. So I am right in or right out. It fits my personality, quick rewards, and I also risk less time in the market for gap downs against me. So I can just make my money and get out. And so I got a nice follow through on Tuesday, got a wonderful follow through on Wednesday. It didn't really chop around and do anything on Thursday. And because of that reason, number one, at that point, I was up 2.5 R. Okay. I was up 2.5 R. The low of the day on Thursday was here. So on Thursday, when I saw it was struggling, I moved my stop loss up to the low of this day. And then basically at close, it came down the last hour of the day. It came down and tagged me out, which is great because I made about 2.5, almost 3 R on this. And if I were to continue to hold, I'd be only up like 1.25, 1.5 R. And so I would have gave back even more than half my position, where now I can look for another trade, or I have that money to roll into a better setup. So that's what kind of fits my personality, especially on the aggressive short-term swing trader. That's what I do. And so those are my trades. That's how I did it. Ask questions, like, comment, subscribe. Go watch my FinX videos. Go watch my weekly preparation videos, and join me on SpaceX. We can always work together and learn together.